My name is Mike Chapman. I own 4 properties in Overlook in Harriman that we bought in 2015, 1 property in Tucker's Row that was bought and finished in 2016, and we have 2 under construction in Porter's Crossing that we bought this year. The thing I wish we had more information on during our process was the construction loans and refinancing those into long-term loans and the insurance. One of the things that FIG does really well, and I think when we started in the process, they were sort of afraid to push some of their partners on us, their lending partners, their insurance partners, trying very hard not to be pushy and allowing owners to kind of go their own way with insurance and mortgages. But we found that the family that they had brought together actually gave us the very best solutions and frankly education. We are first-time investors, and with 7 properties we jumped in with both feet, not really having a whole lot of experience in investment real estate, and so we learned as we went. One of the things that would have been helpful to understand a little better is how the HOA covers insurance on the properties. And this was something that we struggled to figure out a little bit. The first insurance property we got, we insured just like a normal home, unaware that the HOA covers a significant amount of the insurance on these properties. That's one of the reasons you pay a hefty HOA fee. Come to find out that the insurance that we really needed on these properties was much less than we had originally purchased. I think FIG is doing a much better job of educating. In fact, we're just coming away from a FIG retreat where we're getting even more in-depth education on a lot of topics. But understanding how the HOA works, what it covers, what it's for, and then specifically what supplementary insurance we need as property owners after the HOA insurance would have been one major thing we wish we had known at the beginning. Another would be just how the construction loans work. We had a number of properties, a couple of properties that were significantly delayed, and FIG picked up the continuing interest on the construction loans until those properties we completed. Had another property that was significantly accelerated and was done in 6 months. And at that point, we're supposed to go out and find our own long-term financing. Again, come to find out that the very best people that we have worked with have been the FIG partners. And I would strongly recommend keeping within the FIG family just because they are familiar with the products, they're familiar with the organizational structures. Just recently, I kind of wish we had fallen in with the FIG legal team. I think that would have helped us organize our legal entities a little better. So a few things I wish we'd known a little more about was sort of the extended FIG family, I would say, for these insurance, mortgages, legal entities, and then how the insurance actually works, what insurance products we're supposed to buy. For first-time investors, I think there's a lot of people that are ignorant about those things, exactly how investment property works. I would dig in and ask questions. One thing that FIG is really good at is putting you in touch with people who have the answers.